All right, everyone, we'll give everyone just about 30 seconds to kind of get in and get settled here, and we will start the webinar. I can tell you one, this is your definitely going to enjoy with some true professionals offering, I think, a pretty insightful view on both, tactics against humans and training when it comes to systems to fight really all ills when it comes to financial crime and also fraud. So very excited to bring this to everyone. All right, it looks like the attendee numbers are starting to level off, so it is safe to begin. Welcome. Well, tonight, today, or morning, since it could be anywhere for some of our speakers here. It's time zones all over the place. In the morning for some of our speakers. It's at night for me. But this webinar, Envisioning the Future of AML, Proactive Programs, Holistic Views, Digital Channels, done in partnership with FinCrime Compliance Technology Innovator Feedside. So why this topic? And why now? In short, fraud, schemes, scams, and related money laundering are exploding across the board. And more often than not, when fraudsters try to get that money and those funds and move them, they could be touching your institution, either originating there or moving through it to foreign destinations. But why? Fraud has been soaring for many reasons, in part fueled by the fear, loneliness, and anxiety of living through 2 years of a global pandemic. Criminals have become more adept at using love as a weapon in romance scams. They've played on the financial desperation or greed and avarice in the human heart with foreign lottery schemes. This is the case even as banks adjusted to the pandemic to onboard customers in a fully digital manner. Now, this really is a mixed bag. It could be a blessing and a curse, as less resources at the front end of the AML risk ranking exercise. Automating that could mean more resources available for investigators. But criminals are also good at crafting fake faces, full deepfake video and audio, and one of the most insidious frauds that is really the stuff of nightmares akin to a scene from The Walking Dead, synthetic identity frauds. Whether these zombie identities are real or not, they're hungry for more than brains. They're working to steal money from banks, individuals, the government, and anything else they can get their clammy hands on. Now, why do they do this? The goal is to make a version of you that they completely control. And they, rather than just maxing out a bank account or a credit card, they can create clones of you to make loans at multiple banks for hundreds of thousands of dollars. That's why public-private partnerships working in your institution and with other institutions and partnering with law enforcement is so important. So a recent theme in our virtual conference last week at ACFCS was that criminals are working together against banks. They have forums. They have chats, they have full Facebook pages on how to get you and wring every last dollar from your customers. Whether that, even for fake identities, they have full scripts for people and scammers who don't really speak good English. Now, massive hacks against companies and governments around the world have made it easier than ever for criminals to dig up this digital identity graveyard and create monsters that they command. But that's why this webinar is so special to me and important. By being proactive rather than reactive and changing the view of the customer from these kind of annual risk assessments, these slow plodding like moving a giant ship, to following customers closely regardless of that initial risk assessment, it can be transformative for FinCrime teams, much more agile. Now, you combine this with pushing broad knowledge out of the compliance department to frontline staff, the business line, and even in alerts to customers, and you're truly taking what would be deemed, I think, an effective approach, with an eye toward not being a conduit for illicit finance and be viewed as a true ally of law enforcement. That's the name of the game now, effectiveness and being an ally of law enforcement. So some key tips on this. And the Wolfsburg paper that we're going to talk about touches on this, doing an AML risk assessment, but doing it through the lens of fraud or cyber fraud, such as when you screen customers digitally, look at that information like addresses and phone numbers, see if they're coming up in other accounts. That could be a potential red flag for synthetic identities. And again, global standard setting bodies like FATF, like the Wolfsburg Group, they've affirmed this approach, recently issuing guidance to help institutions build a holistic customer profile in FinCrime compliance programs. Now, is there an opportunity to kind of innovate after this crisis, even after years of the financial services industry talking about embracing a holistic approach to AML fraud? has technology finally allowed us to make that a reality? We're going to talk about that today. I want to introduce our amazing speakers, but first, just a quick bit of logistics and flow in the presentation. This session is being recorded and will be available to ACFCS members in a few days. At the end of this session, you'll be asked to take a survey. Please do that and fill it out. It really guides us on what you want to see from us to help you as much as possible. It's all about the community. Also, we want to make this presentation as interactive and useful to you as possible, so please ask questions. Now on to troubleshooting. If you're having any audio issues, the slides are not updating, just try logging in and logging out again. That's the best way. Second, just get as close as possible to your wireless access point, or best of all, plug into a hardline. Or try another browser like Chrome or Firefox, or close other tabs. Unfortunately, these webinar apps can be a bit resource hungry. Now, about ACFCS. Through membership, live, and online training and the CFCS credential, we deliver resources enabling better performance in financial crime compliance across all disciplines, including AML, fraud, cyber, and more, the only association to do that. Now, let me get out of the way here to the real experts, the stars of the show. It's my pleasure to introduce today's speakers. Sean Ryan, Head of Financial Crime Strategy for APAC at FeedZai. Since 1996, Sean has been in data, systems, analytics, and compliance, including more than a decade at Bank of Ireland, leading AML and fraud fighters. He's held top leadership roles with experience in Europe, Middle East and Africa, the Americas, and Asia Pacific. Richard Harris, Head of Strategy and Advisory at FeedZai. Since 1999, Richard has been in financial services, technology, and compliance for more than 2 decades, holding key positions in household name institutions like Visa, PayPal, and Experian. Rich, it's my pleasure to turn it over to you.
Great. Hi, Brian. Hi, everybody. Welcome to the webinar. So I think you've already done the introductions, Brian, for myself and Sean, so I think we'll kick straight on through these slides and get straight to where we should be. I don't know why this is not bringing up the right things. Seem to have got all the polls up. Here we go. So look, what we're going to be talking about today is the future. So what's been happening over the last few years, Brian, you absolutely set the ground perfectly. We've got a perfect storm. We've got an industry which is now looking from a technical basis to move to the cloud. Cloud is definitely on everyone's mind from a technical perspective. If you're going to be managing your data in an institution for the future, cloud is going to be part of your strategy. It's clearly going to provide you advantages in terms of moving more quickly and being more agile in terms of fighting financial crime, but it brings challenges as well. And at the same time, we've got more data than ever before. We're moving from a world where we've been considering, addresses and ultimate beneficial owners and other classic pieces of data that we use in fraud and financial crime. But now we're in a position where we've got device data, we've got real-time data flying through our transactional processes at high speed. We've got lots and lots more signals than we would have had in the past. So making sense of this now in an online connected real-time world becomes increasingly challenging. And at the same time, exactly as you said, Brian, we're trying to make sure that our teams, whether they're fighting fraud, whether they're fighting the different strands of financial crime, whether that's watch list, CTF, whether it's AML transaction monitoring, or even in fraud, the bad guys don't care. They're going across all of these disciplines.
Well
and we need to make
said,
sure that our teams are joined up, right? So the future is all of these things happening at once and happening in one place. So how do you go about that? If you're a practitioner in this space, it's quite bewildering. There's a lot to think about. So handing over to Sean at this point, we're really looking at this guidance that came out from Wolfsburg, as you mentioned. And I think, Sean, if you want to chime in here, I think this is something that is really very close to your heart and something that we've taken on from a strategic perspective at FeedZai very closely.
Thanks for that, Rich. Hey, everybody. It's a real pleasure to be here. Greetings from somewhere in the middle of the world on the ways I'm transitioning from the Northern Hemisphere to the Southern Hemisphere. I'm not far from the equator as we speak right now. So like this is a quote we've taken from the Wolfsburg principle. So, Wolfsburg Group, some of the top leading banks in the world came together to try and, be a proactive foothold on trying to manage what's going to be the right thing to do around the right principles on managing all things fraud and financial crime. This is one quote, and I like it because it's actually quite simple. It's basically saying, your customer lifecycle risk management program is the same as a traditional program. So what you want to do for digital, which is very, very apt right now, especially as a result of the pandemic. People have accelerated all the digital programs. Effectively, Wolfsburg Group is saying the right risk management program for digital is the exact same what you're currently doing for traditional. But even more than that, it's actually saying it's just all about managing your customer risk profile. So you just think about it. You know, Rich, you were saying, you know, we're just going to talk about the future of the AML programs. Well, actually, I'll challenge that. I actually say the future is now. You know, we're talking about what is absolutely possible right here today, right now. We want to be able to identify in a clear, simple way your customer risk profile. Now, how simple is that? This is a data challenge, right? It's a data challenge. It's an organizational challenge. It used to be a technology challenge. Now, Brian, I don't know what you've been seeing, you know, with some of your other clients, but I remember back about 10 years ago, we had the very, very similar statement as we have here from the Wolfsburg Group. It was called single view of risk. It was called single view of customer. It was called single view of customer to be able to manage all things about your customer, whatever dimension. But our challenges was we couldn't do it because the technology wouldn't allow us. We couldn't stream information in real time. We couldn't store huge, vast information. You know, it cost us an absolute fortune. Now we can actually do this. So effectively what Wolfsburg is saying is, hey guys, what you were trying to do 10 or 15 years ago, you need to do now. That's what I'm saying. The future is now. You need to be able to bring together a 360-degree view of risk of your customer. And that's about approaching all things fraud, all things financial crime as one. How's that sound, Brian? Am I talking absolute nonsense? Or is this exactly what we've been seeing bringing forward over the last 10 or 15 years?
No, and I really like what you're saying because it touches on kind of trends I've seen from kind of top regulators in the United States, but also kind of where the industry is going. Like I remember a few years ago, I want to say it was like 2018, but the top regulator in the US came out with kind of it was a statement, but it was basically saying, banks, things have changed. There's more available to you than in years past, so you don't have to do things the same. We're not saying you have to, but we're kind of nudging you to tinker with technology to have better results. And now the regulator couched this by saying, look, if you tinker with a new system and it finds more than your old system, we're not necessarily going to ding you. So that's one piece of the puzzle where you're hitting on. But also right now in FATF pushing for effectiveness in the United States, with also the new anti-money laundering regime, Anti-Money Laundering Act, focusing on effectiveness and results rather than just what you've done in compliance. That's a really big change. And if you're wondering, well, what should we do? What should we focus on? FinCEN came out with, I think it was 8 national priorities. And it is exactly what you just said. You have to look at crime and risk through the lens of crypto, fraud, money laundering, corruption. I mean, this is, like you said, this isn't something that you might have to do soon. This is what you kind of have to do now.
So, but one of the main challenges, sorry, go ahead, Rich.
So, Brian, I think that's exactly the right point, and I think where we're going from here with the Wolfsburg piece is, you know, how do you actually implement that on a practical level? I think that's where we need to go, because I think everyone's agreeing violently that this is the right thing to do, but the answer is, how do you actually make that happen? I think going back to the point I was making at the beginning, and to Sean's point, cloud is really key here, because cloud is enabling that ability to move data at high speed, to store data in vast quantities, and to do it in an economic way that wasn't possible before when you were doing this on-prem and you were, you know, paying very high cost for machines and very high cost for processing. You'd make huge physical outlays. This is something that organizations now can do in a in a prototype way. You can start moving into the cloud. You can do this with one section of your financial crime project, then do this piece by piece. So this is something that you don't have to do as a big bang approach. This is something you can start to say, okay, where am I going to start? Is it at the front end? Am I going to do this with KYC and CDD? Or is it something that I can do with, you know, transaction monitoring? Am I going to start on the fraud side because I need a new fraud engine? Then that gives me the ability to say, look, if I've then got that data flowing through a cloud-based solution, I can then start to apply these technologies to that transactional feed and do my transaction monitoring in that space. So the modularity of this becomes really, really important, because as a business, it allows you to take a step-based approach to this rather than having to go for a big bang and buy a system that does all of this in one go. So I think that's part of the practicality of this is if I'm going to start going on this journey as an organization, which piece of this do I want to start with? What's going end of life? Where's my biggest risk today? And how do I implement that in this way? Get the learnings from that and then roll out in a land and expand kind of approach. Sorry, Sean, you were going to say more on this.
Yeah, there's one word here, that is key, right? How can you do this proactively? Right? We know this entire organization has been a reactive. It was reactive on the basis of,
Correct.
The fraud solutions came in as a direct result of new channels coming on. When the internet happened, we had a much greater focus on debit card fraud. So card fraud systems were brought in place. Behavioral biometrics is a case when the digital channels started coming forward. Behavioral biometrics, digital trust started coming in place. But again, it was reactive as we were going through, so that let's go way back, Brian, when the third AML Act came in, over a decade ago. People weren't talking about personal sanctions back then. Now it's like the local taxi driver knows what a sanction entity is because he's reading about it on the news every day. This has to be a proactive approach. The other key word is holistic, and I've been banging this drum for a while. Rich, we've both been doing this for some while now. But holistically means it's approaching it all as one. We have to stop thinking of things in silo. And back to what we were saying about the cloud capability, having this single instance, having this single approach, having this holistic approach allows you to bring in all of the best skills of your people in one environment, no matter where you are in the world, to manage your capability. Technical resources are a real challenge these days. You can have your capability managed by your organization from multiple places, multiple time zones. Look at us here today. We're across 3 different continents right here. 3 of us can be managing the cloud instance for some of these fraud and financial crime platforms if we want to. But it's about doing it in a proactive manner. That's the most important piece here. It's gone are the days of, developing a business case because there's a new piece of regulation coming in. You need to be working with your regulator. Actually, one of the great things is the regulators being proactive now by working with the vendors and saying, show me what's possible. What's the art of the possible? Not the art of the impossible. What's the art of the possible?
Exactly. And look, we're seeing this with the FCA or the Monetary Authority in Singapore, where you've got guidance now pushing people to start using things like machine learning. It's positively encouraged, moving into that kind of environment, Brian. So it's, I think we need to keep moving forward here. But I think part of this is to look at what are the key challenges in this space. Like what stands in our way as an industry in terms of getting this done? Because again, when I'm out, I've been on a global tour with our CEO recently, talking to the C-levels and the chief risk officers and the chief compliance officers of a number of banks globally. And I don't hear much resistance to this view of the world and this idea. I hear a lot of people moving in this direction and wanting to move in this direction. But the question is, okay, what's stopping me? What's in my way? So, I mean, fundamentally, it's pretty obvious. This is not a simple challenge in some ways because the customer info is changing faster than it ever did before. We've got that feed coming in real time. My customers' data is updating. People are more mobile than they've been. The pandemic's over. I'm here in Sydney. Sean, you're there, halfway across the world. People are out there and moving around. People are back out there migrating, doing jobs abroad, transiting from different countries to other countries. We've got even more complexity coming into the sanction space because of the global geopolitical situation. So this information is moving at a much higher speed and a more, fiendish rate than it ever has in the past. But our approach to risk assessments are generally out of date. Most people I'm talking to in banks are still thinking in terms of a 30-day cycle if you're lucky, and some are doing less. This is something that's now coming down to, and as Wolfsburg quite rightly says, this should be event-based, not calendar-based. We're moving to a point where if the data changes, then the risk rating needs to change. That's where we need to move, because we expect that to happen in everything else in our lives. If I'm shopping on Amazon, I expect them to deal with the fact that I'm moving in real time. If I change address with Amazon, I expect to be able to ship to the new address that day, not because I've just moved house. I've gone through that process. I don't expect them to update my address and it take a week for that to happen. And if Amazon can do that, well, my bank should be able to do that, right? So that's the regulator's going to take that view of the world going forward, because that's the world we all live in now. It's a 24/7 switched on real-time world. We need to be moving into the same situation, but it's still hard for the bank because you've got lots of these disparate systems. The data is siloed. it is all over the place, and a lot of it's not particularly clean. So those are definitely issues that the customers that we're talking to in the marketplace are having to deal with.
One shift I'm
go ahead,
seeing.
Sean.
Sorry, Brian. Just one shift that I'm seeing, and I'll be really interested in our attendees after whether they recognise this as well in organisations. The chief data officer is getting involved, right? This is an information problem, right? If the information's changing in milliseconds, and we've got poor data management principles, we've got poor data quality, that's really, really going to be a significant constraint in doing this accurately. So what we're seeing, especially with the large global organizations, where they've got the right resources, the chief data officer is keenly involved now in all of the financial crime programs and the strategy. I don't know, Brian, if you've seen it, Rich, when you were traveling around with our CEO, have you come across this in the last few weeks?
I want to hear from Brian.
So everyone, I have to kind of talk about these contextual things, because what our speakers are getting into there are literally some of the most difficult challenges, entrenched challenges that the financial crime compliance space has faced really since its inception. And it is this kind of lag between what actually happens in the account. So you open up an account. It's a low-risk person. This guy, he's a pensioner. He's classically low risk. But then all of a sudden, he starts making transactions to a crypto exchange, and then transactions to Nigeria, and you file 3 SARs on him. And when you look at that risk assessment a year later, it still says low risk. For the longest time, there hasn't been an ability to link up what happened in that account, and that in some kind of ideally real-time basis, it wraps back into the original risk assessment and goes up. Normally, that's found at 6-month or annual intervals with this giant risk assessment exercise. So, that's one thing I think I'm glad you're getting into, because if you can improve that, I think the results of the compliance program, they're much sharper, and you get to bad things happening a lot sooner.
No, I think that's exactly right.
Let me jump in here very quickly, Rich, and I'll pass to you. But here's one piece that we're extremely passionate about, and it keeps getting lost. If we're focusing on managing risk, right, absolutely controlling risk, we're keeping the regulator happy, we're managing our cost base in terms of our exposure to fraud. But the key piece here is, if you're managing risk in real time and you're managing the customer risk in real time, this means you can widen the envelope of what risk you're taking. It actually means you can have a greater share of wallet for an approach by proposing a greater propensity of wallet to your customers, because you're managing that risk in real time. So this is one piece we've touched on before. By managing risk in real time, you can actually turn this area into a revenue generator, rather than just looking at it as a cost base.
Absolutely, Sean. I think the other area that we talk about this a lot in our discussions around sort of 4 key areas that we work in. As an industry, we work in prevention, detection, remediation, and ultimately compliance, right? And there always tends to be, when you get into these discussions, a massive focus on detection, because it's about detection and reporting that events happened and making sure that we comply by doing that. But for me, and what I tend to see in organizations who are really thinking through this carefully, it's the further up the chain you can move towards prevention, the better this is going to be economically for the FI, for the bank or the institution, because a lot of that cost is in the detection and then the reporting. Because as soon as you've done the reporting and you've got to do that remediation process, then you're expending a lot of money to do that. You've got a lot of people involved. It's skilled work. It's typically, hours of investigation in a lot of cases for every single case. So look, in the old days, I guess, 5 or 10 years ago, the lack of the data meant that false positive rates could really get out of control. So therefore, prevention at the front end would be deemed as a bad thing by the bank from a commercial perspective, because you'd be worried about denying good business along with too much compliance at the front end. But the accuracy that we can have, now you're into a digital customer lifecycle approach, the accuracy you can have using digital tools when you're looking at device ID, malware detection, those kind of tools and biometrics at the beginning, you can start to get super granular about what you're looking at that prevention stage. If you can be effective there, then you're really cleaning out the portfolio for later on, and you're going to have less detection and less remediation to do. That has a positive financial effect on the FI. And you're not going to be throwing out good business because you can be far more granular about what you're doing, especially when you start looking at customer profiling and bringing data across the organization, understanding your different demographics, your different risk profiles, and how your individual customers relate to those. You don't have to resort to cohorts. So when you're doing this properly, then you can do that prevention piece very, very granularly. You can do it very accurately. You can clean the population out and make sure that you're accepting all the business you can. And as you say, you can increase your risk profile and still make sure you're detecting, you're detecting what needs to be detected. And then you're still managing lower operational cost on the back end. And I think that's the change that we can see in the industry. If you do this right, that's the opportunity. It's not just about better detection. It's about better prevention leading to less detection work to be required and less overall cost.
I actually really like that you. Oh, go ahead, Sean.
You're far away, Brian. You're good.
I'll just want to make a really quick point. I like that you're talking about prevention because, again, this is like a theme that we were talking about last week at our FinCrime Virtual Week conference, is that not just are the criminals working together against your customers and kind of against you as well, they're actually literally sharing information on what banks do and do not have the best AML processes and how long they were able to make a fraud go on at a certain bank. So if it gets in this kind of criminal underbelly that your bank is pretty easy on fraud and they can get scams going for weeks or months, they're actually going to flock to your institution. So really when we're talking about all this detection, the prevention piece means you're doing such a good job of AML and fighting fraud that the criminals know that and they're choosing to go to another bank. So just a quick point.
No, Brian, that's absolutely an effect that we see.
Oh, go ahead, Sean.
So what we were talking about right at the very start, and again, it's the piece. The future is now. Okay, so this is quite simple. What we're trying to do here is we're trying to manage our customers' risk. We're going to manage our risk in real time. That's by bringing in as much information as possible about our customers, all the different risk factors in that single view and in the real-time capability. Now, again, just to repeat, 10 years ago, we wanted to do it. We couldn't do it because it was really, really challenging to process huge volumes of information in milliseconds. We can do that now. The technology's there. So when we're looking at, doing a risk profile, 10, 15 years ago, we were constrained to name date of birth, address, nationality, to do some basic matching against, the sanctions lists. Well, actually now what we're able to do is we're able to do this in real time and also do a reach out and look and see if there's any adverse media out there, again, in real time. So we can go out to the global data content that's happening in real time and see what adverse media is coming in on any one of the entities that we're screening. At the same time, we're able to reach out to internally to our systems and look at all of the transactional data, whether that's fraud, whether it's anti-money laundering, payment screening information, customer screening information, you name it, any of the risk information across a full customer lifecycle financial crime program. We're able to bring in this information as well and append it to the customer risk profile. And that includes the operational, all the alerts and SARS as well. So effectively where we're moving to now, back to the future is now, as we're doing this, and this capability is available because the text here, is we're able to bring in all of these different risk factors into a single view of all fraud or financial crime risk in real time of your customer. That's what it's about. And if we're able to do that, and back to what you were saying, Brian, and organized crime recognizes that this institution has the latest technology, that this institution is able to manage customer risk in real time. It's back into the old analogy. You don't need to outswim the shark. You just need to be the fastest swimmer. Get the best tech in. You get the best tech in, get the best program, get your chief data officer involved, put in proper information management control principles, data governance, alongside your fraud financial crime program, and manage all of this information in real time. It's actually quite simple, guys.
Exactly, Sean, and utilize digital transformation programs within the bank to do this, because If you're going through that digital transformation program and they're looking at it from a customer experience point of view, that level of profiling which the bank is thinking about in terms of monetizing on customer experience level is exactly what you need here as well. It can be made to underpin the same process. And that typically gives you the real-time capability, which is going to allow you to move to this trigger-based approach. So, and get away from that calendar-based approach, because a calendar-based approach where you're going to risk rate people on every 30 days, every 90 days, every 360 days. I spoke to one bank, who I shall not name, who was risk rating every 275 days or whatever it was. It's like,
not surprised me.
We do not need to do that anymore. Your data is moving in milliseconds now across the bank. That's the architecture everyone's moving to if they're not at it. We're screening all of our payments in real time. So that when I started in this industry, all those years ago, it was the minority of transactions that were going to get screened for fraud in real time. It was just a tiny population that you'd look at. Everything else was risk rated on a daily basis. We've gone through that process with customers now, but now we're at the stage where moving data around the bank and running these processes is simple. It should be easy to do. And as you move into a cloud-based architecture, as you move into a real-time event-based architecture across the bank, this has to underpin everything, because you get those controls in place. They become a standard part of what happens. And then, it's not onerous on the bank to do this kind of thing. And it allows you to bring all of this data to bear, because all of this data is flying around within the bank in real time. There is no bank out there who's not running an app-based process now, that their customers managing. I mean, how often are we going into branches as individuals to make transactions or to make updates? I can do everything I need to do from this. So I don't need to go into a branch. There's no physical process going on. Everything I'm doing is digital. So from that perspective, all the data is digital, and I get a better risk profile on myself then. If I'm doing this digitally, I've got a device tied here. I've got biometrics. I've got all this extra layer of data, which from previous lives of doing this in person or doing it through an ATM or whatever other method I'm going to use to transfer money or make account applications or doing those other tasks, I've got this extra layer of digital identity data, and that's really, really valuable. It really helps us make better decisions as you go through. So I think I see this digital customer lifecycle as an opportunity for us as an industry, because we get better data, we get more granularity, we're able to make better decisions. It's an opportunity to do better. It's not a challenge.
I had a quick comment, but Sean, I know you probably have some good points. Did you want to go, or do you want me let me do a quick point?
You can jump in. Thank you.
So just two things, and again, it's all fresh in my mind. I had 5 days in a row of crazy tactics to fight fraud and AML. They're kind of still top of my mind. But I just want to underscore really how important what these gentlemen are saying is, because the data that you capture, even digitally, can be so indicative of a potential criminal, like opening an account or something. And this one example just sticks out in my mind, is they were showing how criminals opening an account, and it was the speed of the account opening. It was almost more fast than a human finger could go. So that was obviously they captured that data. That was able to show that that's potentially fraudulent, this proactive approach. But even how you swipe on your phone, oh, this normal phone, when people log into their bank account, the account owner normally swipes like this. Oh, but this time this account opened and the swipes were this way. And I was like, oh my God, that's amazing. They never even met this person. And look at the data that they have, to kind of help fight bad guys getting in there. I wanted to say that you're dead on the money on this stuff.
Brian, it's so important, because I think not everybody realizes the value that kind of data, particularly the biometric data that you're talking about there, can bring to the table. Because, we see this on the fraud side of the house in scams. The difference between somebody, I'm paying you money because I know you, I go and hit the pay button in the app. I don't hesitate. The person being scammed, we know that typically they're hesitating because the person being scammed still knows at some point psychologically that this doesn't feel quite right or quite normal.
It feels wrong.
They're under pressure. They're in a heightened emotional state in a lot of ways. They've been, basically coerced. And at that point, the way that person taps the screen is not the same way that they tap the screen doing it in a normal, relaxed manner. You can detect that. And that's the level where you can then start to say as a bank, how do I put up an extra message here to say, are you sure you want to do this? Because then again, getting people at that point, getting the intervention there. Now you don't want to. I've got a bank that gives me an intervention message every time I wire a digital, transaction of any type. Are you sure this is? I click through that without thinking now, because as a consumer, I don't read the warning. I've seen it 10 times. I ignore the warning. That warning needs to be targeted at a situation where it makes sense and it's actually relevant, because then if I haven't seen the warning before, suddenly the opportunity to make somebody think twice. But at the same time, as you say, if you're looking at this in terms of, we see this on mule account creation, that's script based. This is the kind of stuff where if you're going to go and create 3,000 or 4,000 mule accounts within a bank with synthetic identities, nobody's sitting typing that stuff in anymore. It's all, it's a script that's running in the background. Now it's trying to look like a human typing it, and typically the good ones will now be putting delays in there to try and make it look like it's not as fast as she's doing it. So they will literally put timers in there. But again, what you'll start to see is you'll see patterns, because the timer will be the same timer every single time. So, it will play half a second, then type. And then you can start to pick up those types of patterns as well, because you'll see that, yes, they are trying to game the system and pretend they're a human by not reacting at superhuman speed, like a Marvel character. But at the same time, if the delay is always consistently 500 millisecond, but no human being can consistently do a 500 millisecond delay before they start typing. It's impossible. So, those kind of patterns are things you can start to pick up, for example. So I think, the power of this type of data that you get from the digital channel, as I said, it's a real opportunity for us in this space. It gives us an extra level of richness to start to discover this. And then if I can discover that I've got mule accounts appearing in one part of the bank, and I can share that with my team members on the other side of the house, whether that's going from the fraud side of the house to the compliance side of the house or vice versa, then that's valuable information either way, because those mule accounts, they might be used to scam people and collect the proceeds of scams, but someone's then going to launder that money back through the system somewhere. So everybody needs to know that they exist. It's not a problem for one or the other.
Oh man, I have such a good point on that, but I want to let Sean weigh in. Any thoughts on this, Sean?
Yeah, I sort of put a different lens on it, a slightly different lens. While we're talking about fraud prevention and financial crime prevention, people automatically look into the constraints. By bringing in this capability, we can actually change an economy. And what I'm talking about here is that if we're able to manage risk, and by bringing in all of this external third-party data, that previously we were unable to do so because we couldn't process it. We had a very restricted API. Some of the traditional vendors out there were like going, does not compute. If the information doesn't map into my API, we just won't work. So how does that work when you want to get into a new developing country and you want to start getting into the real apt and real powerful world of financial inclusion? Like getting people onto the financial system. So we've been able to bring in third-party data where there's no, direct credit statement from some traditional vendors, and being able to manage the risk of these customers in real time. We're able to have a whole new business model and business case for financial inclusion. We're seeing this hugely across Asia and Asia Pacific and in Africa as well, where we've got hundreds of millions of people who are not on the financial ladder. And this is one thing that we're extremely, extremely proud of, extremely passionate about, to be able to flip the paradigm by investing in the right fraud and financial crime controls, right technology, is actually enabling people to get onto the financial system.
No, that's a really good point. And I mean, I'm going to say a phrase here, and all the people on the call are going to go, oh, we know all about that. But de-risking, the reason why Sean is touching on such an important point is because of the regulatory pressure, because of these massive financial crime penalties for anti-money laundering and sanctions that have soared not into the millions or hundreds of millions of dollars, but billions of dollars. Some banks have just said banking in this country is not worth the risk. Banking these kinds of customers are not worth the risk. So they just de-risk entire categories. Now, yeah, this might save the bank, but then that tension between serving law enforcement, now all the financial intelligence and data that were going to come from these, generally sometimes, riskier areas for corruption or financial crime, now all those data streams are gone. So, it is a delicate balancing act. But I wanted to make a quick point, Rich, on something you had said about, like money mules and fraud and AML working together. And to me, I see a kind of, a perfect little microcosm of how this could work. And it was from something that we talked about last week. So you'd mentioned how money mules, maybe it starts at, you can work from home, a college kid, and do this. But sometimes the money mule actually originates as a victim. They were a victim of a romance scam or a lottery scam. And once the fraudster stole all the money that they could from that person, now they turned them into a money mule. And when you kind of understand that trends like that can happen, your fraud team could be saying this person came in and they were talking about like romance scams and wiring money. So I'm going to tell you, AML people, I want you to tighten the transaction scrutiny of this account because later on this person might be a money mule. So kind of interesting things here to have that communication and coordination between departments.
No, and I think that ties perfectly to what we're going to look at here on the screen. It's about protecting all stages of the customer lifecycle and the customer journey. It's making sure that you're layering those things over and you've got communication backwards and forwards between all the teams. And communication is key here. And part of that is about making sure everyone's got access to the same data, consistency of data, consistency of platform. I know it's hard to do. And coming back to some of these points, I just sort of reference back to some of that discussion around device and what we call digital trust and biometrics is a lot of the hard stuff around that is making sure that you've got that consistent application across, the financial institution, because quite often you've got, a system that's embedded within the bank and it's looking at logins or it's looking at, transactional behavior or it's looking at every time the customer touches the website or the app or those things. The difficulty there is not necessarily those systems are good systems. There are many on the marketplace. The challenge is often for the financial institution making sure that how does that data translate back into the other parallel systems that need that information? Because a lot of fidelity can be lost in that situation. So one of the best practices I would have is look at the integration points you have, because a lot of the time within the bank, you've got that data and you've got richness and you've got depth, but a lot of it's not necessarily making it back into those decisioning systems because from a technical perspective, it's been throttled and you're bringing that back. So if you're in that situation as a practitioner and that data's out there, it's been throttled, that's the question you need to ask is, why haven't I got access to the data? What can I do to get access to that data? How do I get that appended into the, the transactional customer, records that are coming through to me so that I can access that? Because otherwise it's just reduced to a device ID or something like that. Then in and of itself, that's not necessarily going to give you the richness you want. You want that level of data. Where did they access from? What were the IP addresses? What countries? Were they on a VPN? All of those other things can start to be very, very indicative, and getting that fidelity of that data through to you is something that's worth doing. But to come back to the key point here, it's how do you start to do this in a joined up way, protect the entire life cycle? That allows you to shift further up the chain and get back towards prevent, as we talked about before. But it also means that everybody's got is on a level playing field across the organization when they're making their risk assessments, because all of that data is available all the time, and increasingly real time is where you need to be able to do that as well as possible.
Well, hey, Rich,
thoughts?
I'm sure a lot of our audience are looking at this and going, saying like, hey, this is great, guys. Fantastic. One slide showing all of these capabilities, all singing and dancing in one instance together, fully integrated chatting. When we know most of our audience have multiple AML systems,
this is the dream. This is the dream.
In an ideal world.
But again, back to the futures now. Of course, if you've got a greenfield site and you're a digital bank starting off, you can do this right now. Okay, so let's put our hands up and recognize that the capabilities out here today to do real-time customer risk profiling at every stage of the customer lifecycle for every single use case here in one instance, fully integrated, talking together. Greenfield site, fantastic. But not all of us have the luxury of building a brand new digital bank and having it up and running in 3 or 4 months. We have multiple systems. So, one of the pieces I would suggest is when we're looking at going on to your new program, real time is key. We've touched on it. Data is key. Well, if you look at the one use case that covers every single component across the full customer life cycle, it's your Know Your Customer CDD. To date, we've been doing that in a as Rich said, a periodic review based. That periodic review, well, for your high risk customers, who was like once a year, low risk, maybe 5 years. Again, the rationale behind that batch-based capability was a technology constraint. When the regulator came up with KYC and CDD about 10 years ago, and banks were saying, hey, you know, we will bring in a policy of 1, 3, or 5 years based on risk appetite. It was purely down to the constraints of them not being able to process that information quickly. The regulator would have wanted it in real time. Of course, that makes absolute sense. So what we're seeing is the technology today now is allowing you to go and do trigger-based reviews. So a lot of organizations are using the foundation of their new financial crime and fraud transformation program being at the cornerstone, that foundation catalyst is moving to trigger-based reviews across the full customer lifecycle for KYC and CDD, and then start to migrate, have a hybrid approach and migrate the information from your existing legacy AML transaction monitoring solution into your CDD solution to have that dynamic customer risk profile that we shared earlier.
I had a question for you on that, Sean, because there's something that I remember. Again, a theme from last week's conference is that bad guys are very savvy, and they're actively trying to game your anti-money laundering system, and they also know that banks risk rate things differently. Now we're talking about risk rating and risk rating. I mean, everyone on the webinar here should understand why this is a big deal, is because when you do that risk assessment, that sensitizes everything else, whether that's low, medium, or high. That sensitizes how closely the transaction monitoring system will alert on that account. So what bad guys are doing is they're trying to pick the lowest risk entity, an older person, a retired person, a college kid, and they're trying to steal that data from that person or create a synthetic identity that looks at that, and to try to keep that scam going as long as possible, because that would be a historically low risk account. With the strategy that you're talking about, would it make it kind of easier to potentially identify frauds out of these lower risk accounts as well?
Oh, absolutely. What it allows us to do, it allows us to identify the anomalies in real time. It's those outliers. What's the unusual behavior that just doesn't make sense? And that's because we're able to meet what the regulator wants. We've seen some recent media articles about how the existing regulations just not really worthwhile. Like, we know the amount of money that's been put into a lot of the AML transaction monitoring programs, the target operating model, the sheer size of the cost of keeping these programs going. But what's the outcome? It's not great. It's not great. However, if we're bringing in all structured and unstructured data and monitoring all information, every single event across the full customer lifecycle, we're able to see these anomalies happen in real time. So we can turn around and identify anti-money laundering again as what's happening. We're able to identify complex layering that we couldn't see beforehand. We're able to identify where we've actually had organizations defraud a bank and wash that fraudulent money back through the same bank.
Oh my gosh, that's embarrassing.
Right? So because of the siloed systems, by bringing it all together, this is the art of the possible now. It's about doing all this in real time, identify the anomalies, have that real-time dynamic customer risk profiling, and the CDD layers where it's happening. That's the transformation point. That's the catalyst of change now. A few years ago, the transformational point was around real-time payments, and people said to upgrade their fraud systems. The entire backbone, spine of a financial crime technology stack now is the KYC CDD product.
So I had a data question, but I wanted to, Rich, give you a chance to weigh in on some of the good points that Sean is making.
I can. I mean, look, I think we're also getting to the point where we've only got a few minutes left, and I'm sure there are some questions in the audience as well. So I want to make sure we leave a little bit of time for those. Well, I think, just to underline where Sean was going and bring us sort of towards some kind of conclusion here, it's if you've heard Sean say one thing 5 times in this presentation, it's the future is now. So I figured I'd steal this slide and bring it to this point, because I think that's the key. You know, as an industry, the challenge has always been the technology's not being able to deliver on the aspiration that we've had as an industry in terms of how we should be scoring, how we should be screening, how we should be managing customer risk. But the reality is that day has arrived. We can do this now, and no excuses. How are we going to solve for this? Because the technology is there. Now it's up to us to implement this on this basis, because we should be doing this on a day-to-day basis. We should be doing this on an event trigger basis. There's no excuse for me knowing that a customer has changed address, changed, jurisdiction, changed job, their risk has changed because that event has happened and they've told us about it. They're not, it's on the system. It's our obligation to risk rate it on that basis, not wait another 30 days to decide that we'll do it then. So, that's the spirit of what we should be doing. If we're serious about stopping this stuff, we should be doing that. And look, we've got the granularity and the capability now not to make the excuse that, doing this is going to be a business prevention issue, or it's going to cost me good business, because, we've got the granularity. We can process every single individual customer as an individual. We don't have to group people in cohorts and do those things. I can risk rate every single individual customer, and I should. And I should do that as soon as their circumstances change, or their payment profile changes, or their balance changes even. All of those things could be triggers that allow me to look at the customer differently. And if I'm required to do so, I should.
So I had some data-related questions. One of them, and I like that you're kind of giving a roadmap for how to actually do this. I mean, this slide is so rich. I hope everyone is kind of like, doing a print screen and making sure to grab it. But you're talking a lot about kind of the internal data sources of the bank, the legacy systems, the transaction monitoring systems, the alert systems, trying to get that all on the same page. I guess, I believe I've heard the term like data lake, where it's all just there for the taking. But I have a question about kind of external data. And that this could be structured or unstructured, but kind of the richness of data that's in like social media and Facebook and LinkedIn, do you also see that as important to overlaying that on what you have internally? And the reason I ask that is because when we were talking about like synthetic IDs and all this stuff, I'm always trying to think the simplest way to stop a bad guy. And it hit me. I was like, well, wait a minute. If this is not a real person and it's like a Frankenstein monster combined of other people, other pieces of people, I don't think this person is going to have a social media presence. So if a bank took the time to say, let me look and see if this person has a social media presence, you can't fake 10 years of online social interactions. That's a way to find out that person isn't real. How important is it to kind of get that external data and find a way to weave that in?
External data is key, but there's one piece that is really, really important. And again, back into why we're seeing chief data officers getting involved in these programs, because privacy is key. Right? It's all well and good going out there to get access to information, as long as we've got the right privileges to be able to do so. So we know of there's some telcos out there that have absolutely sensational data, but they're able to pinpoint accuracy of mobile phones at a level that is unheard of. And we're allowed to get access to this information for the right purposes, providing it's not breaching people's privacy. Mm-hmm. So for sure, unstructured data that's out there as well in around social media and the network, contextual networking of different entities, bringing it together, give that context of why do they have a relationship with somebody else or an organization or a country. This information, of course, is going to help. So unstructured and structured data, external and internal data, as much data as possible. But for sure, and it's something that really needs to go strongly on, make sure you involve your chief data officer, especially around privacy.
I think that's critical, Sean. And I think, look, the other thing to remember here is, look, additional data, we often get hung up as industry on, I need to get additional data because my data is not good enough. I think the reality is if you're running the right kind of profiling on the data that you do have, you will be amazed about the additional richness that you can uncover when you can slice and dice the data you have from lots of different angles. So additional data is great, it's important, but often, don't overlook the data that you do have. Are you making the most of that? Are you rinsing every last piece of value out of it. Like I made that point about the, the device and biometric data. Quite often, there's a lot of richness inside the organization which you're not getting because the fidelity is cut down in terms of, how that's centrally stored or transmitted. Those things can be, gold mines for you, and it already exists. So, there's a multi-layer approach here, but you don't necessarily have to run out to the market and try and, purchase, find, import additional data, because that creates expense and cost. Do look at what you have internally and how you're accessing that. And part of what you can do is, if you can increase the fidelity or the management of the transport layer and the profiling layer you have internally within the bank, you can probably get much better results with the data that you have. So, it's a two-pronged approach. One is make the most of what you have, and then the second one is, okay, then knowing what you have and the assets that you have internally, how do you then maximize that externally? And I would absolutely underline Sean's point. Privacy is key. I was talking to a bank in APAC last week, and they were pointing out, look, they were concerned about non-PII data and the encryption of that. And I was saying, well, why are you so concerned about non-PII data? And they were saying, look, we've done studies. We can pinpoint individuals just using the public non-PII data that we've got around them and their transaction history and that other stuff. The technical data is not, private in any way. It's not PII data as you traditionally classify it.
That's true.
You can effectively use it to triangulate somebody very, very easily. So there's getting a level of complexity around privacy there now, which banks are recognizing. So get your chief data officer involved, get those teams involved so you understand what the limits of privacy are in terms of this as well, because that is going to be critical.
I know we're getting kind of close to time here. We've only got about 3-4 minutes left. I was curious if, and this could go for either of you, because I have a rare and special opportunity to talk to two people who truly understand not just kind of current systems of bank and transaction monitoring and things like that, but kind of the whole evolution before there even was these terms like anti-money laundering, transaction monitoring, and sanction screening.
Light way of saying, oh, Brian.
Yes. Well, I almost said I wanted to say this, but I was like editing quickly. I wanted to say I have almost nearly half a century of experience on the call here, but I didn't want you to like pretend to be stroking your white beard and call me a young whippersnapper. Say, hey, these kids are getting in there crazy. Yeah, no, don't worry. Do you have any kind of, because this is not easy, like getting this data, making sure it's accurate, cleaning it up, having some system where it all flows together. A lot of banks are struggling with this, particularly, ironically enough, even the bigger banks, even though they have more resources and technology and thought leaders at their disposal. Are there any kind of tips, tricks, tactics for banks that want to start this journey, either ways to do that or pitfalls to avoid? Because I know you've been working with banks on things like this. Just curious, any thoughts on that?
I mean, I'll make one really short comment and then I'll let Sean wrap up because I think we're going to hit time. So look, for me, it's as a bank or a financial institution that's regulated in your market, then you will have a roadmap in front of you in terms of what systems you have and what's going end of life. The mistake I see that some institutions make is trying to, boil the ocean and do too much at once. Pick the use case, pick the channel, pick the piece that you need to address most urgently. And I think Sean made a great point earlier. CDD KYC is one of the biggest bangs for the buck here. In terms of deployment and capability, doing this in a modern way is relatively straightforward and simple, but the impact it can have is significant because it goes across the entire life cycle. So I think that's a good place to start. But really, it comes down to your organization. What's going end of life? What's the burning platform? Pick one thing and start there, and then evolve from there. And do one thing, do it well, get it right, get it live, then move on to the next one. Because the banks that I see succeed at this tend to follow that approach rather than the banks that sit down and go, right, I need to do all 15 things at once.
Do it all at once.
Yeah, and that tends to evolve a multi-year, discussion process, which then, doesn't produce anything, because it is really challenging. So pick one thing, do it well, then evolve from there and iterate and improve for the next one and improve the next one. You build muscle memory and you get better at doing it and you succeed.
Sean, your thoughts?
You used one word, Brian, when you were opening up with that question. It was strategy. Okay, what we need to do is need to step back, look at exactly where we are, and recognize that real-time, trigger-based real-time customer-based scoring is where it's at. So you want to make sure that you've got a strategy where you've got the horizontal layer, that backbone, having the capability to do real-time dynamic customer risk profiling, and layer that approach as you're moving forward. Your roadmap is the layer 1, layer 2, layer 3, layer 4, depending on your risk appetite, depending on what sort of challenges you have with your existing legacy solutions. But that's the key piece. Sit back, breathe, have a strategy, be proactive, and trust, get a partner that you trust with, because gone are the days of having multiple vendors around this piece. Get a partner, go on the journey together. And trust your partner to work with you.
Now, I just want to go a minute or two over here because we've talked a lot about technology and systems, and that's good because we needed to. This is some of the most complex areas of how to fight financial crime, but that's just one major piece of the puzzle. The other piece is kind of the human dimension, the human training, the human communication and coordination. I just want to make a quick point of ways I've seen banks do this, at very little cost and have very big improvements in their effectiveness. But, when the goal here is, not to do all these things so that regulators can come in and ding you, that's not the thing. We're not on this kind of compliance gravy train to make auditors rich and to make consultants rich and to keep examiners in business. We're not doing it because of that. We're doing it to stop bad guys. And I've seen one of the ways on the human side is exactly this convergence holistic mindset, but from the departmental angle where you're actually getting the fraud fighter, the anti-money laundering person, the analyst, the cyber person in the bank, and having them all communicate. Maybe it's a once-a-week meeting. Maybe you create some secure messaging platform, but you start to communicate so that investigations aren't running in parallel. Even if you don't have access to these kind of interwoven data sources, you can start there. Or maybe you decide, I'm going to make a local public-private partnership with law enforcement in my area. Or you're going to say, let me find the local office of a federal investigative agency, DOJ, or doing things like that. When the regulator comes and they want to kind of see your quick hits that you improved, and these kind of larger initiatives, you can say something like, on the human side, I've started this. I've made a public-private partnership. I've made communication channels for my various teams. And I'm partnering with this vendor to do this technology product to improve my data sources and to sharpen my risk assessment. And I believe that's going to prevent the cascade of poor customer monitoring that have led to massive AML penalties. Saying something like that is going to make a regulator go, wow, you're really taking this seriously. I trust you a little bit more than another bank that I go to that just says, we're planning, we're going to make changes, but we're waiting for the regs. It's all about that proactive mindset. But just any ideas or thoughts on the human side from either of you gentlemen, and I guess we'll wrap it up.
No, Brian, I think you're exactly bang on there. You really are. It comes down to communication, and whether you're solving that communication piece with technology, and increasingly we have to do that as an industry because people aren't all working in the same office. That's something we've seen post-pandemic. People are in different locations. You had 500 people in an office at one point, and now you've got 500 offices. So technology definitely plays a part. But the key that partnership is key. Both sides of the house need to talk to each other. Financial crime and fraud. The bad guys don't care. They're not even clear of themselves whether they're doing fraud or financial crime half the time, and they don't stop to think about it. They're just trying to make money and steal people's money and wash that money, clean that money. They're not interested in which piece of the process they're doing. I mean, sure, they share information and regulations, but they're not looking at it from a regulatory perspective. They're just trying to get around the system. So, we've got to think in the same way as an industry. We've got to be prepared to share. We've got to be prepared to join up. Obviously, within the interests of privacy and everything else, we've got to stay above board as an industry. But we've got to be thinking like this. It's a team game, and we've got to be working as a team.
Well said. I like that. And that's also a theme underscored in our event, which is you can't do it alone, but you have partners that are willing to help you. You're not this lonely analyst or lonely fraud fighter in your cubicle fighting. You're part of this interlinked continuum of compliance officers, law enforcement, auditors, regulators, all kind of marching forward to the same goal. Sean, any last thoughts?
2 words: communication and collaboration.
Yeah, I like that. Well said. Well, everyone, we appreciate you staying just a few minutes over, but I kind of knew that would happen. Once our kind of test sessions about this, we all had so much fun chatting. It would be like, oh, we're going to just be on a 15-minute test session or tech session. An hour later, we're still talking about these subjects and cheering each other on. And that's one thing we really hope to do with these webinars, is not just give you practical, tactical advice so that when you get back to your desk, you can do something different and do it better. Hopefully, we refuel your passion. We kind of reinstill in you a sense of purpose, that really you are doing good work and you are doing very important work. So everyone, we have a last couple bit of housekeeping things here. Like I said, this is being recorded, so this will be available for ACFCS members in just a few days. And please, please fill out that survey. Everything we do here, it really comes from our members of what will help them better detect and prevent financial crime, be more efficient and effective, and really be seen as a true ally of law enforcement. So everyone, thank you so much for being here, and we hope to see you again at another ACFCS webinar or event soon. Bye for now.